The numbers are not out yet on hedge funds, but this is what we think. We think the average hedge fund is probably down 40% on their investors' monies. If you gave them $1 million, and hedge funds don't work with you if you give them 100 grand. You got to give them $1 million, $5 million, $10 million. Some hedge funds want $50 and $100 million from institutions or individual families before they'll do business with you. So imagine putting up $100 million and right now you're sitting with $60 million. Because remember, they use leverage. So whatever you see happen in the market in terms of up cycles and down cycles, hedge fund performance is always exaggerated from that number because they use leverage. In other words, if they work with $1 billion, they go out and they borrow another, usually somewhere between $6 and $8 billion, and then they put if it's $8 billion, they take your billion and the $8 billion, that's $9 billion, and they put the $9 billion to work, either long or short stocks. Now when they're wrong, their returns get magnified on the downside. So if a guy goes out and he's buying stocks and if he's wrong, he's down 10%, he's down 10%. But if a hedge fund is wrong, let's say they're down 3%, but they're using 7 or 8 to 1 leverage, then the 3% times 7 is 21% down, or 24% times 8, depending on the leverage factor. That's what's happening with hedge funds. We think that the hedge fund collapse, that the collapse of these portfolios is going to be so severe that the redemptions are going to become even more severe, and depending on what they invested in and how they intertwine themselves in the economy by buying subprime debt and other things, the federal government may have to step in through the Treasury and save some of these hedge funds the way they're saving some of the banks, because some of these hedge funds literally may be too big to fail or too intertwined with the economy that we can't unwind them when they do fail. So that's what you're going to be looking at. Now the hedge fund industry is about $1.7 trillion in managed assets. It is our opinion that sometime in 2009, no later than 2010, that number is going to collapse from $1.7 trillion to probably $500 billion. We think that 60 or 70% of the hedge fund industry is going to disappear from today as this recession takes on more and more prominence and becomes more and more part of our daily lives. These guys are wrong, and you know, in a declining market like this, if you're long, you're wrong. They're wrong. If you want more information on these topics or how to make money in the market, come visit the website. Have a great day.